So we're now recording, just so everyone is aware of that. So good morning, welcome. My name is Damian Connolly, and this is essentially, for this session anyway, a short journey through some accountancy basics. So my business is Sakura Business Solutions. We're an accountancy practice. We have an office in London, in Fulham, and we also have an office over in Dublin. And my background is not necessarily an interior designer, but I've worked previously in sort of 40, 50 million pound businesses originally that were in financial services, property, recruitment, and professional services. And since 2014-ish, was when I set Sakura up, and I've been working with obviously slightly smaller businesses than I previously worked with, and we've ended up working with, among other things, interior designers. So hence why there's a number of queries and questions and issues that have come up over those years we worked with interior designers. So I'm happy to share some of those and answer some of those questions today, or if this session goes well, then I'm happy to take on a few other sessions that are maybe a little bit more specific or slightly more relevant to particular topics or questions that people have today.
Sorry, just 1 second. Sorry, somebody.
That's fine. So what I want to do is talk, first of all, a little bit about the basics, because actually I'm a big believer that whether you're an interior designer, whether you're in any other business, you need to get the basics right. If you can't do that, very little else works. So I just want to run through that briefly with everyone today, and then we'll move on to some other areas around VAT, international, and structure as well that people might be interested in. So I don't know if you can mute yourselves there at all on your side. I'm not sure if that's possible. That'd be great.
It's at the bottom, everyone, on the left-hand side. Bottom middle.
Okay. So in my view, the basics are really, really important for any business, whether you're an interior designer, whether you're a larger business or not. And if you don't get the basics right, then you're going to have problems understanding how your business works and where you are with the business and what you're trying to do. So that's always the point that I start with. So maybe to start today is about, how confident are you running your interior designer business? How confident are you that you know what you need to do, and you understand what the financials and what your relationship with HMRC are, and how you are going to make a profit and continue to make profits. So obviously you're in that stream of people who've made the leap. You set up your own business, you're running your own business, you're not in employment. So that in itself is a big jump, a big leap, and something that's quite different and requires a different set of skills than just working in a job, working for other people, taking a salary. And any successful business is a profitable business, and a profitable business is one that's run right and that has behind it either an accountant or a set of basic accountancy structures that allow the business and the business owner to function correctly, to keep the admin to a minimum, and to be able to make decisions and to push the business and drive it forward. Because at the end of the day, particularly for every business, but I guess for interior designers, your superpower isn't in working out whether something is vatable or not vatable. Your superpower is actually doing the design work, being able to discuss with clients what their vision is and deliver on that vision. So what you really want to do is make sure you're focusing more of your time on that and less of your time stressing or spending time on admin or dealing with HMRC. So that's the important thing. And another thing that comes up quite often with especially interior designer clients for me is just that fear of HMRC. People seem to have a concern that HMRC are out to get them, or that they need to be fearful of HMRC. And I guess the starting point is that HMRC have a job to do. They're interested in doing that job, and they want to be able to do it with the minimum of fuss. And particularly in today's environment where they're not particularly well staffed and systems don't particularly work, you know, they're really just there to try and you know, get the revenue in and build a relationship and just make sure they're ticking the box and getting their own job done. So there shouldn't really be a sense of fear of HMRC. I think there should be a healthy awareness that you want to get it right. You want to try and get it right first time. But actually, even if you don't get it right first time, HMRC are not interested in necessarily fighting with you. What they want is someone who can work with them, resolve any issues, and get that case off their desk. So I always start with that, as there's no need to be fearful of HMRC. They're just trying to do a job, and as long as you are open and honest, and even if you don't get everything right, if you are open and honest with them, and you know, you'll end up in a good position being able to fix any problems that do occur. So when we talk about the basics, getting the basics right gives you the platform to run your business. It gives you the platform to be able to not worry or stress about the things that you have to do, but then it gives you the tools and the ability to make decisions on the business and drive it in the direction that you need it to go in. So looking at it really, really simply, you know, you need to know what your sales and your billings or your turnover are. That's really, really important. It's the key thing for everything you do. Probably less so from your end, but particularly from my end, you really need to know your costs. You need to know your overheads. These are really, really important issues, because if you don't know those, you can't know if you're making a profit. And ultimately, you're in business to make a profit. You're in business to take a salary. You're in business, hopefully, to take some dividends out of the business and actually generate the life that you're looking for from your business. So it all goes back to the basics, which is, are you making a profit? And everything you do needs to, set out to make a profit, and also be able to monitor that and make sure you are making a profit. You need to know how much cash you have in the bank. A lot of businesses actually just focus on the cash in the bank, which is good in many respects, but it's not the full picture. But yes, if you know your billings, if you know your costs, you need to know how much cash you have in the bank as well. That's important. And one other thing then is that often gets overlooked when you're talking about the basics is knowing who owes you money and who you owe money to, but particularly who owes you money. It's not unusual, even discussing with interior designers, with invoices that go back 30, 60, 90 days, you're struggling to continue to deliver on the project while not having received money from a number of your larger customers or clients. So part of that is knowing how much people owe you, knowing when they should have paid you, and having a process to get that cash in. And part of that then, in terms of the basic, feeds into getting your invoices out on time. Because again, if you delay your invoice by 30 days, you're delaying your payment by 30 days. And then if your client or your customer drifts by another 30 days, you could be 90 days behind the date you should have originally gotten paid. So again, it goes back to basics. Get your invoice, know when you should be invoicing, invoice on time, know what your payment dates are, and then follow up on those. And those simple basics will give you the platform to run the business properly. And why are the basics important? Well, it touches on some of the things I've mentioned already. You need to know where your business is today. So you need to know how much turnover you've generated. Is it profitable? Is it not profitable? And also, if you've got a budget or you've got a budget on your individual projects, then knowing where you are allows you then to understand where that is compared to the jobs you're working on and the clients you're working with at the moment. The other reason the basics are important is if you haven't got that clarity about who you've billed, who owes you money, what cash is in the bank, then how do you make those decisions? How do you make decisions in your business? So how do you know how much to quote one of your clients, your customers, if you don't have the basic information to hand in terms of how much you've invoiced, whether it was profitable in the last project? How do you know when to bring on a freelance member of staff? If you don't know what your costs are, if you don't know what your cash in the bank, if you've no idea what's happening over the next couple of months, then how do you make a decision on whether to bring on another freelance to help you complete a project? Or how do you even decide whether to take on a project? How do you know even to take on a project unless you have the figures or the basics in place to know what a previous project delivered or what you know or what you expect your profit to be in a project. So making decisions is really important. So if you don't have those basics in place, how do you make those decisions on your business to move it forward? The other thing that I've seen more often than ideally is that if you aren't looking at things such as your project by project details, sometimes you can be making a loss on one of your projects without even realizing it. And then if you're wondering why you're not performing or your profit isn't as high as you expect it to be, it may be because you've got one project that, unbeknownst to you, is generating a loss and dragging everything down. So again, part of the basics is maybe looking on a project by project basis, and then you can see that every project is delivering exactly as you expect it to, or if any projects are getting quite close to break even or they're moving into a loss position, you're able to pick that up and spot that early and then take a decision and have a conversation with a client. Or take some action on that basis. So again, it's all about decision making. Also, if you've got complexity in your business, if you're not just doing design fees, but you're also offering FF&E, maybe you've got different types of clients, commercial clients versus private clients. There's a lot of complexity being brought into your business. Perhaps you're offering client monies, you're dealing as a principal, possibly as an agent. There's a lot of complexity in your business. If you cannot get the basics right, then you're going to become overwhelmed by that complexity. And it also means then you'll sort of lose the run of yourself, essentially, not understand what's happening on your projects, not understand whether you're charging out the correct amounts and receiving the right amounts back from your customer. So complexity will also start to cause you an issue if your basics aren't in place. And finally, the basics ultimately end up in cash. Cash is king in your business. In every business, cash is king. So if you don't have the basics in place, if you're not invoicing on time, if you haven't got clarity about your payment terms, if you're not checking that people are paying and what's outstanding in terms of your invoices, then you'll end up with a cash crunch or a cash problem. So again, it's nothing complex. It's nothing particularly tricky or difficult. If you do the basics right, then you'll be able to make decisions on your business. You'll be able to manage your cash that little bit better. And you'll also be able to make sure you don't fall into problems with potentially loss-making projects that you're losing control on. You'll spot it much quicker and be able to take action to resolve those issues as well. So the other thing I say to clients more widely is know your numbers. And it's not just about knowing your numbers, it's about checking your numbers as well. So you could know what your numbers are, but if you aren't taking the time to sit down weekly or monthly or quarterly and check those figures, then it's all well and good knowing what the figures should be. But if you're not checking them against the actual or the reality, then you're missing a trick, and you're probably missing out on doing the right things and moving the business forward. So things that you probably need to look at is, first of all, know what numbers are important for your business. There are some of them that I would talk about as an accountant that are consistent across every single business, but there's also certain businesses that numbers are more important than in other businesses. So it's about understanding what your key numbers are. So I put down some of the ones that I would think are important, or key numbers. The number of business owners who don't know their turnover is quite maybe shocking at times, but you just need to know your turnover, your sales, your billings, whatever you term it. You need to know what that is, whether it's weekly, but certainly monthly, quarterly and annually. You need to know the cash in the bank. That's a key number. If you have that on your dashboard of numbers that you're checking every month, that would be a good one as well. Outstanding invoices, absolutely key, because that can get out of control quite quickly. And as I said, that will impact your cash in the bank. So that's another key number as far as I'm concerned. Profit, gross profit. Are you making money in the projects even before your ongoing costs? That's important. And I would even add, for your businesses, you should be looking at it on a project by project basis. And I know a lot of people use Excel spreadsheets to do that, but actually if you set up your accountancy system correctly, that should be able to run out straight out of the system, and then you can compare it to your quotes or your original budgets against those projects. But I would say monitor by project, because again, it's not unusual to see one or other project that maybe goes a little bit out of control, or was underquoted, or you've got a difficult client, or there's a lot more time being spent on it than you expected. So it's about knowing what that is, being able to quantify, and then being able to take action, whether it's walk away from the project or start having discussions with the client to try and bring that back in line. Again, you've got to be able to see that. Overheads, know what your overhead costs are on a run rate. What are they on average every month? And if they move up or down, then that again is a trigger for you to investigate a little bit more. And then, is the business making a profit? That's ultimately what we're all here to do. So they're your key numbers. There may be one or two others that you, on an individual basis, would say is quite important. Some of them might not even be financial. So in some business, it could be things like churn, how many clients are you losing, because that's quite important to your business. You may have a target profit on your projects. Maybe that's a number you're keeping an eye on. You keep an eye on it across all of your projects. So just sit down and work out what your key numbers are. A lot of them will be financial, but there might be a few others that are non-financial that might be worth noting and keeping an eye on as well. But again, you're not going to be able to look at those numbers or get those numbers if you don't do the basic things well and properly. So I guess the question is, if any of those numbers are of interest to you, make sure you've got a note to start thinking about what are the key numbers for your business. And so the basic framework, as far as I'm concerned, is you just need to have your accountancy software. So in some cases that may be QuickBooks, in some cases that might be Xero. If you're using a software other than that, I probably wouldn't recommend it. But you need to have a good finance system. And then on top of that, the key thing to it is making sure your bookkeeping, your day-to-day bookkeeping, your weekly bookkeeping, your monthly bookkeeping is up to date. Because it's all well and good having a very snazzy system, which does all the bells and whistles and does amazing things. But actually what it comes down to is the information that's in there has to be up to date, has to be accurate, and then it gives you the information you need then to make those decisions and to make sure that the business is running in the way that you expecting it to be running. And then add to that, if you've also then got your key numbers, then you're able to look at the reports that come out of your system, and then you compare it to your numbers, which then gives you the basics for you to sit down and go, I think I know where the business is. I think I know what I need to work on next week. And I think I know where we have some challenges or problems. And it's that framework that you need to have in place. And then the other thing I wanted to, one thing I was going to mention is probably a number of you are using something like SD Mac or STPC. So again, that would be a system that will form part of your framework. Again, we need to maybe talk about it on a different session about how that might work. But again, if that's part of your framework, I'd say the framework is the accountancy software, the admin or the CRM system, which I would term SD is, and then the bookkeeping, keeping everything up to date, and then knowing your numbers. As a slight aside, if you are using SD, I had a meeting last week with an agency who were doing some work on SD. So I know the last time I looked at it was quite clunky, but apparently there is a project in place to make it online and to make it a bit more slick and exciting and a bit more 21st century. So just as an aside. Good, yeah. Someone's happy about that, which is great. Okay, so I think that's probably enough on the basics. It may be a lot of the things that you're familiar with or maybe doing already, but it was really just a generic starting point for our session today to talk about the basics. Because actually, if you've seen me on LinkedIn or anywhere else, no matter what business I'm dealing with, I talk about the basics are always the key. So even you can go into a £4 million turnover business, and you will not. It's not unusual to come across a debtors list which has hundreds of lines on it, hundreds of errors, because the basics haven't been done over a long period of time, which then makes it a real problem to manage. So finish up on that one. The other thing that may or may not be relevant to people on today is just trading structures. And generally, there are a lot of questions around that, quite often from people maybe starting up and saying, what's the best structure to kick off with? Should I be a sole trader? Should I set up a limited company immediately? Or, when's the right time to move from one to the other? And as I might say a few times between now and the end, and I'll probably say in the future, the answer generally is it depends. So if you're starting off, if you cannot see that there's going to be a huge amount of activity, if you're a bit nervous of setting up a company and you don't really fancy the admin, then I would say probably sole trader is a great way to start. If you're somebody who thinks, and the reasons for that is simple, it's simpler to manage the day-to-day bookkeeping. The numbers are smaller. You could use an Excel sheet. Up until recently, you could use an Excel sheet. People understand a little bit easier, and it's an easy way just to get started without too much faff in many respects. Whereas if you're someone saying, look, I'm starting off, but actually I've got potentially 2 big contracts. My vision is to turn the business into, £1 million turnover business. I'm hoping to take on some staff soon, etc. Then I would say, well, maybe you're better off skipping the sole trader route and going straight for a limited company, because then you can get in front of your clients. You can present yourself as that bigger business, and then you can get working with them, and you don't have to change anything 12 months down the line. Because the pros with the sole trader is it's nice and easy to start with. The cons is that if you get bigger, if you start employing staff, you may then think, actually, I'm a bit nervous about being personally responsible for staff without that shield of a limited company. You may need to change to a limited company. Maybe you can't get the same name at Companies House. So there's a lot of practical issues that might become a problem. But if you think you're going to be relatively small for a period of time, that's when sole trader wins out. If you have visions for bigger business, taking on staff, you're going to deal with clients who might be slightly larger. If you want to present yourself as slightly bigger, then a limited company is probably the best way to start that process. And again, that's why I say it depends, because I wouldn't say it's a one size fits all. There may be some specific reasons around tax that might mean you might want to stay as a sole trader for a period of time, or you might want to jump into a limited company. But I'd always couch it and say it's more than just tax. I would say never make any business decisions on tax. Tax is based on profitability. You're setting up the business to generate profits. Go for profit. Don't worry about the tax too much, because you'll have time when you generate the profits to either find the cash to pay the tax, or you'll have the opportunity then to look at any tax reliefs or any opportunities around tax. So it really depends how you think you're going to run the business over the next 12 or 24 months, what type of clients you're going to deal with, whether you're going to deal with large FF&E budgets, whether you're going to take on staff. They're all slightly wider issues that I would encourage people to consider before making that decision, and that would then inform their decision. In terms of growing SMEs, obviously there's different issues. If you're a business that's already 200k and above, the issues there are really about managing a team, growing the business, monitoring it carefully, making sure every project is profitable, getting in front of new clients, having a new client pipeline. There's a whole set of different issues there that we're not going to talk about today. But in terms of starting off for smaller businesses and that sole trader and limited company question, they're the pros and cons for one or the other. So I think another question that comes up quite often is VAT, and we'll mention VAT in the next slide as well. But again, the question, should I register for VAT for those smaller businesses? Again, is that answer that I gave earlier? It depends. So if you think you are If you think you're going to be dealing with bigger clients, if you've set up a limited company, if you want to present yourself as a slightly bigger business, then registering for VAT sooner rather than later makes a lot more sense. Because if you're under the VAT threshold, everybody knows you're under the VAT threshold and what your turnover is because it's under 90,000. If you're trying to present yourself as a slightly bigger business, there's a clear marketing reason to register now rather than register later. Another thing to bear in mind, which is frankly a bit of a pain for business owners, but also maybe for us as accountants, is if you leave registration, say, I'll wait till I get to the threshold before I register for VAT. What you're facing then is the moment you go a pound above the £90,000 threshold, you need to be registered for VAT within 30 days. And that brings a whole list of practical issues, which is, how do you know when you've breached the 90,000 threshold? Well, if you're not doing your basics correctly, keeping an eye on your billing, your invoicing, you might know. But also if you're in mid-project, you'll have a practical issue of saying, well, today I'm issuing an invoice without VAT and tomorrow I'm issuing an invoice with VAT. And there's about then having those discussions, which project or which client do you tell, or do you try and continue charging no VAT up to the last possible moment? Or how do you have those discussions and midway through a project change the billing, the way you bill, the amount that they're going to be receiving? So again, that's a practical issue. Also, if you're dealing with clients who are VAT registered, if you're dealing with maybe business clients rather than private clients, then again, it's probably a no-brainer to register sooner rather than later. So there's a variety of practical and other issues around registering for a VAT, marketing related, practical related. And also if you're dealing with FF&E, so I have an example of an average budget appears to be around that 200, 250,000 mark for medium-sized projects and above. Well, if you're acting as a principal on FF&E, well, if you're dealing with a budget 250,000, you're going to have to register for VAT at some point, and you definitely don't want to try and have to handle that admin and that hassle when you're midway through sourcing and getting everything dealt with. But even if you're acting as an agent, your 20% fee will come out at about 50,000 on that project. So 2 projects, just FF&E, no design fees, you're going to be over the threshold. So again, the way I look at it is think carefully. I would generally recommend not waiting till the last minute and not trying to game the system. Look at your business, what you're planning to do, how you're planning to do it, and then make that decision. And I think there was some questions about international work, interior designers, international work. It's very challenging. I call it the VAT nightmare because as an interior designer, you could be dealing with UK clients, you could be dealing with international clients, you could be providing your services from the UK. In some cases, you could be out of their premises in Switzerland or Luxembourg or anything else providing the services. That's a whole different service with a whole different set of VAT requirements. You could be sourcing goods from the UK for your international client. You could be on location with your international client sourcing goods from the UK or from other parts of the EU or outside the EU. All of those have different VAT issues associated with them as well. So VAT is a bit of a nightmare when you're dealing with international clients or international projects. So when I get questions about, what do I do with VAT? Generally, I'll go back to the old traditional, it depends. And so some providing your design services probably a little bit simpler in many cases if you're providing from the UK, but there's so many variables that go around international clients. We need to detail out what's happening on each individual service. Because again, if you're sourcing goods, we've had an example with a client where they were a UK business, they had an international client, I think in France, where they sourced the goods from had a completely different VAT requirement. So they had to deal slightly differently and register for VAT for goods that were sourced from Germany that were going to the location of France, entirely different from those going from the UK to the client in France. So it all depends on the location of the client. It can also depend on whether it's a business client or a private client. That can have an impact on the VAT that can be different from for your business, for another business. So there's a whole variety of moving parts. And so if anyone has international business, it'll come down to, it depends. Tell me exactly what you're doing it, how you're doing it, where you're doing it, when you're doing it. And only then can you really come up with a definitive answer on what VAT is charged, where the registration needs to be, and how much, whether you charge UK VAT or not. So again, you can thank Brexit for that, bringing a great deal more complexity to everything that you are doing as part of your business. But again, just a broad summary, international is a bit of a nightmare, and there's no easy way around it, unfortunately. And then finally, and very briefly, a question that comes up quite often is generally around FF&E. It's the old classic as, should I act as a principal? Should I act as an agent? Should I hold client money? Should I not hold client monies? And again, there's a lot around how people manage FF&E projects. And then there's also issues around how they should be managing FF&E projects. So in some cases, I do end up in debates with some clients, and they say, well, what should I be doing? I tell them what they should do, and then they say, well, I can't do that, and I can't do that. I need to do it this way. And I say, that's fine. I'll help you work out a system, but if you're asking me what you should be doing, I can only tell you what you should be doing. And then it's about you to run your business and try and keep as close to what you should be doing as much as possible. So simply, from my end, I would say if you're acting as principal, that's the easiest process, and that's the easiest to manage because it's very, very simple. You bill the client, all the suppliers bill you, it goes in and out of your finance system. It's clean, clear. You'll know whether you've invoiced something. You can track it back to what you sourced. Very, very easy. Acting as agent can be a little bit more challenging, but essentially then you're sourcing everything. You're taking your fee. You're making sure your fee matches the value of everything you've sourced. And then you've just got to make sure that you are ticking the box in terms of letting the client buy the goods. And then you're only assisting, supporting, guiding, making sure it gets into the lounge, gets into the kitchen, gets into where it needs to go. The problem that I see is that on occasion people can claim they're acting as an agent, but their contract tends to suggest they are principal, and the way that they act tends to suggest they're principal. So again, all I can say is this is what you need to do to make sure it's absolutely clear in terms of what I see the rules as. But if there's some grey areas, then try and stick as close as possible to what I'd suggest is the right way to do it, and there may be no practical way around it. But again, all I can do is suggest what I think should be done and the way it should be done. And then it's about trying to manage it on a practical basis, because you've got to run your business at the end of the day. And then equally, when you're holding client monies, that's a whole additional piece of bookkeeping, admin that you need to manage. And again, there can be problems where you've got multiple clients with multiple funds in your client account, and being able to be clear about whose money and how much relates to each individual client. And again, getting the basics right, tracking everything correctly, making sure you're not using your office monies rather than your client monies in error, and keeping all that in balance can be a challenge at times, and are issues that we can sometimes have to get involved in. But again, we can have a whole separate webinar on FF&E and the do's and don'ts and the wheres and the hows, etc., etc. Okay, so I think that's everything that I was going to talk very briefly about today. Obviously, we've had an added extra of the fire alarm multiple times, which was, you pay good money for that sort of thing in other places, but hopefully I got my points across and it made reasonable amounts of sense. So, any questions?
Hi, Damian. Thank you. That was really interesting. I've got a couple of questions, if that's okay. So the first question is, currently I use Estimac, so I'm really happy that they're changing the front end because it is quite clunky. So that's going to be a good thing. But in terms of kind of digital platforms, I'm looking into Xero and QuickBooks. Probably going to go with Xero. What are the deadlines in terms of when everything needs to be digital? Or is that now?
So the Making Tax Digital, which I think you're referring to, relates only to sole traders. So if you're a limited company, everything should be digital by now. But if you're a sole trader, it's from April 26 onwards, it needs to be digital. And when they talk about digital, what it means is that you need to be able to submit information to on a digital basis. So at the moment, you've got VAT returns. And if you're registered for VAT, you need to submit the VAT return directly from your account system or through software of some sort directly to HMRC online. Essentially, as a sole trader, you'll be doing 4 mini self-assessment or sole trader returns across the year. I haven't had sight of what they look like at the moment, but it'll be like a VAT return. So you'll have to connect your bookkeeping system, connect it up to HMRC, and then every quarter by a certain date, you need to submit your information across to them. Then they'll take that, accept it, and then at the end of the year, you'll do a final self-assessment tax return with all of your sole trader information, and then you'll have to do an adjustment for anything that's moved. But they can then see what's happening in your business across the year, and I guess part of it will eventually end up with maybe additional payments throughout the year. But at the moment, and you need to be, it's coming in from April, and the threshold is 50,000 in turnover. So if you're under 50,000 turnover, you don't have to go digital yet.
Oh, I see. Right. Okay.
So you can, but from 2027, they're going to reduce it to about 30,000. So as far as I'm concerned, any client who's doing any sort of sole trader activity, I'm just going to put them onto Xero or QuickBooks, because it may change by 2027. They might change the figures, but also it just means we're just training people into the right ways of doing things before they get hit with having to do it. So from April, if your turnover is over 50,000, you have to do it. For the next year, it's from 30,000, you have to do it. So
And do you have any preference in terms of QuickBooks or Xero?
I don't really, because technically they're both pretty similar and they do broadly the same things. Personally, I probably like Xero a little bit more. And that might be because I find it a bit easier to connect other software to Xero maybe than to QuickBooks, which maybe isn't quite accurate, but it feels more accurate to me.
Yeah.
So they're both broadly the same. We support both of them. But just personally, I kind of like Xero, and maybe I'm not doing justice. But a lot of our clients like QuickBooks, they find it a little bit easier to use, or a little bit more user friendly, or a bit easier on the eye for them. So.
Okay, thank you. The other question I have is on expenses. So there's 2 parts to my business essentially. First part is the interior design services, and the second part is a location house. So my house is used as a location house, so we rent it out quite frequently for shoots and things like that. My accountant is very conservative in terms of putting any expenses through. But recently I've been thinking, really things like cleaning and gardening and all those things that make my house nice should be an expense, because also I invite clients into my house to look at flooring and colours and bits and pieces like that, and have meetings at home, which is where my office is. So how can I kind of manage those things, and are they legitimately an expense?
And that's all gone into your self-assessment tax return at the moment, is it?
Well, parts of it wouldn't. I mean, no, at the moment I don't put the cleaner and the gardener through. But I'm wondering if I can.
The income's going in alongside your design, all into your tax return.
Both streams are going into my one business. Yeah.
Okay. I mean, the rule is any expense that's wholly, necessarily, and something else, can't remember the word. There's 3 words: wholly, necessarily, for the purpose of the business, those expenses are allowable. So there's no hard and fast rule about what expenses. You just need, I think, to take a sensible view and be able to stand behind that. So if there's specific cleaning work that needs to be done beforehand and afterwards, if there's some staging type work that needs to be done, then I would say you can claim all those expenses back. But you need to, I would say, if you can see it written up on the front of Daily Mail on a Monday and you can say, yeah, I'm fine with that, then I think you can claim the expenses back.
Yeah.
If you're saying, well, I'll claim them back, but I wouldn't want anyone to ask me about it, then I'd say they're probably not justified. So it's the same question. We've got a couple of self-employed clients who do things like personal training, and there's nothing anywhere which tells you what a personal trainer can claim back, and what a personal trainer can claim back is entirely different to what anyone else can claim back, because for the most part, clothes are not something you can claim back in any business. But for personal training, my view is if this clothes very specific for being able to do your job, then we can claim that back because it's wholly necessarily for the purpose of your business.
Yeah.
So I would be conservative, but realistic is the way I'd look at it. I'd always be conservative, but I'd be realistic. So if anyone argue with me, I'd say, well, I can't see why that's a problem. This is what the rules are. I can't see anything, or I'd probably check it out just to be sure. But as long as it's clearly, you can say, I need to do this before clients come along. I need to do this after clients come along. Then why wouldn't it be allowable? It's absolutely key for your business. There's no personal benefit from it. So I would say, put those expenses through, in my view.
Yeah. Okay.
What I would say, and I know nothing more about your business than what you said, is I would be very careful about home, property, residences, and business activity, because the devil's in the detail. But if you are using your home as a business, potentially that means if you go to sell your property, there may be a business element to that isn't tax-free, capital gains tax-free. So everyone can sell their personal property, and there's no capital gains tax on it as a matter of rule. But if you have part of your business, so there's a chunk of your business is from your home, and you're claiming a lot of activity on that, it could cause you an issue when you come to sell the property, where some of it is deemed to be not personal and it is business.
Oh, so that's interesting.
It's a complex area, so I don't really want to get into it other than to flag it up that anytime anyone says to me, I'm working from home, can I claim this? Then I get very conservative and say, unless you want to get into the detail of it and try and put a rental agreement in place and this and that and the other, I keep it really simple to avoid any potential of your home being taxable when you go to sell it.
Yeah, I mean, at the moment, I think I just put through a nominal amount every month for like overheads, electricity, etc. Maybe it's I don't know, £15 a month, like a really nominal amount.
Yeah, no, it's more about the income. So I just checked that with your accountant about the income you're generating from your home as a location. I would just double check that that's not potentially problematic.
Oh, in terms of the location house element, right?
Because you're generating income from your property.
Yeah.
So you'd need to be just a little. I mean, it may be absolutely fine, but I would personally check. I would check that for any client I'm speaking to.
Okay, that's great to know. Thank you.
Suzanne, did I see you've got a question?
No. I was, first of all, thank you so much for everything. That was very informative. And I'm wondering, Claudia, you had a question. I know this was more diving deeper into the working abroad VAT issue, which Damian, you said is very specific and might require some more investigation. But do we want to ask anything on that note?
And if we could touch on it, there's one particular point that would probably be relevant for a lot of us is if you import from anywhere in Europe and the supplier has charged you VAT already in Italy or Germany or any European country, how can you now claim that VAT back? If you just pass it on, you pass on, let's say, the invoice to the client. What I'm doing at the moment is I I treat it as goods that have already paid VAT. So I'm treating it as a disbursement. So as an agent procurement. And then I charge a commission, which I add VAT to, UK VAT. But the actual goods that contain European VAT, I don't know how to claim that VAT back or what to do with it at all. Do we do anything with it, or?
Again, that's one of those really complex questions. It's very hard to answer off the bat, but I'd probably start, if I was speaking to you as a client, I'd probably say, well, are you a limited company? Are you VAT registered? They're charging you French or German VAT or Italian VAT. What goods are they sending across to you? Have they got your VAT number? What are the other questions I'd probably ask? Are they, have they got the right details in terms of why they're charging VAT in the first case? And then if they are charging the VAT, then the answer, broadly speaking, is you can't really claim it back. You almost have to view it as a cost of good, an additional cost of your goods. So just like now, if you've got any import duties, custom duties, DHL fees, they just form part of the cost of that good for your client, and you just need to charge that on with any commission or profit on top.
Let's see.
So broadly speaking, if they're exporting the goods, they shouldn't. And if you're a business, I wouldn't have thought they should be charging VAT off the bat. So there could be any number of reasons why that is. And it could be as simple, because I've seen it before, it could be as simple as they haven't got your right details, which is why they're charging VAT. And that could be the simple solution. And then we move on to the next and the next and the next to try and work out why that is. But ultimately, they're charging you VAT. It's just a cost of goods because you're not going to get it back. And even when you could get that VAT back, for many countries, they had a de minimis limit. So you'd have to go to Germany and France and try and apply for the cash back, but they'd only give a refund of any VAT if it was over 2,000 euros or 5,000 euros. So anything below that was just dead money anyway.
Okay, but that thank you, Damian. That is very useful to know that really, if the European supplier has my UK VAT number and I'm a limited company with a VAT registration, they should not charge VAT for exports.
As a general rule, I would say if they're exporting, they shouldn't be, but it could depend on the good you're dealing with. It could depend on where it's going. It may be going slightly round the houses way to getting you. There could be a whole variety of things, but generally, if you're exporting goods, there shouldn't be VAT charged on it if it's to a VAT registered business. But as I said, there's always a few ifs, buts, and maybes that I would tend to delve into. I go down through a list and try and get to the bottom of it.
Thank you.
Thank you very much. It could be that they just don't have the right details, or it could be the specific item that you're dealing with as well.
Okay.
But ultimately, it's a cost to your business as it stands at the moment, so you should be just charging that on.
Right. Okay. Very well. Thank you.
Okay. Any more questions?
Yeah. Could I ask a question? What's the best way of paying yourself if you've got a limited company?
The best way of paying yourself?
Yeah, and be tax efficient, obviously. But yeah, at the same time.
Well, typically, if you are running a limited company, you would pay yourself a salary, and then you would take dividends out of the profits, and that's generally how people pay themselves, and that's the most sort of tax efficient way as possible of doing it. With the rise in corporation tax, etc., dividends are becoming less and less tax efficient than they were 4 or 5 years ago. But again, I would couch it with the depends element, because the most tax efficient way is to pay yourself the minimum amount of salary so that you're picking up the credits that you get a state pension, and then you take as much as you can, assuming you're profitable, out as dividends. So again, you can't take dividends out of your business if you're not profitable. So if you're not doing the basics correctly and you're not accounting for everything correctly, you might think you're making a profit, taking money out, and suddenly you find you're making a loss and you've got a problem then to deal with. So assuming you're profitable, you take the dividends out, you take a minimum salary.
Okay.
But
Thank you.
if you are maybe buying a house, if you're going on maternity, if you have a lifestyle that means actually you need a certain minimum amount of income every month, then the debate or the discussion I'd have with a client is maybe you should be charging yourself an appropriate salary and taking dividends out on top, and not trying to get stuck in the a saving tax piece, because actually what you're doing is, you know, if you had another COVID, it's based on your salary, all the payments that people got. So people who paid themselves the minimum got very little. Those who took out a decent salary got more. So again, I couch it in the terms of think about the wider issue than just a tax issue. If you've got, depending on what's happening in your business over the next 12 months, there may be reasons to pay yourself more salary and less dividends. So if you want to be really tax efficient, minimum salary, more dividends. But actually, I'd encourage you to take a slightly wider view, because you'll want to bump up your salary if you're going to go on maternity leave. You'll need to bump up your salary if you're getting a mortgage, because that's the salary that the bank would look at predominantly, and will give you the widest range of lenders. So there's other issues around the edges that I would encourage people to consider.
Thank you. Thanks.
Thank you, Damian. Are there any more questions? I mean, Damian, I was just wondering, you recorded this, correct?
Yes, it's recorded, even with the alarm bells and everything in it.
Will you be able to share that with us? Just
I think so. As I said, it's slightly new tech that I'm using today, so I might need to work it out, but I'm pretty sure I can. So I'll do that.
Great.
I have one more question, Damian. I'm wondering if we would like to book, some time with you as a consultant to advise on some further questions. How would that work? And could you send us an email about a quote, or should we contact you individually?
Well, if you connect with me on LinkedIn, I've just put the details on the bottom. That's maybe a good starting point, and I can then pick up things from there. I do have a call link as well, so we could do something like that. No, it's not on this one. It's on another one I've got. But yeah, if you drop me a line through LinkedIn, or my email address, I think, is on here. No. Well, you've got my email address. You've got my email address because I've separately emailed everybody the link this morning. Okay. So if you drop me an email or you connect me on LinkedIn, then that's a good starting point that we can have a discussion and find out what it is you need. If it's just a very general sort of chat, we can do it in a 15-minute call. That's fine. If there's anything more dramatic than that, then we'd probably need to talk about a fee for that. But we can start at the start.
On that note, Damian, what is really valuable to us is your experience with interior designers specifically as well, because you know a lot about FF&E and the principal versus agent and the implications, etc. So what I would love is these last two slides where you're talking about yourself and the business. If you could just maybe send them to me separately, and I'd be happy to pop them on our WhatsApp chat, because there might be people who would like to get in touch with you as well for accountancy services, so we can just put that on there if that's okay with you.
That's fine. Yeah, I can send you on the slides, and I'll send you on the recording once I've
perfect
downloaded, and I might try and get rid of the fire alarm if I can edit it a little bit as well. So that might be something I'll do. So maybe give me a couple of days to edit that out, and that might be quite helpful. And then I think I've said to you separately that I've kind of got in mind a few topics to deal with in future webinars. So I'm happy to do those if you want to agree among yourselves a few dates over the next few months or the next 6 months. Then we can put them in the diary. I'll prepare for them. I'm happy to do something similar. So I'll leave that with you to let me know, maybe Suzanne, and then I'm happy to do that.
Oh, sorry, Damian, I was just going to say, those webinars that you're planning to do, would they extend? Do you have other interior designers outside of our group that you're thinking of involving? Because in that case, I would almost say you propose the dates, I put them onto our group chat, and then whoever can join and whoever is interested will join, because sometimes it's a bit difficult for us to find dates that work.
Okay.
So it depends on how you like to approach it. If you have other groups that you're including in this or other interior designers, just let us know and we'll pop it onto our chat.
Fine. I mean, I was focusing on your group initially because I do have other interior designers on LinkedIn and various other places that I'm probably going to connect with and do something for separately. But if this format has worked this morning, then actually my plan would probably to keep it small and just have sort of 7 to 9 people on each of these events. If this has been reasonably smooth, apart from the fire alarm, and if it's worked pretty smoothly, then it might be the way to do it over the next few months. And if we get 50 people suddenly wanting to have a session, then we can go on to Teams or Zoom instead. But I think this has worked as a little bit slicker maybe than just going on Zoom. And
okay, well, why don't you just we can communicate separately, and then just let me know, and also with the topics, and we'll definitely have a look, and because that would potentially be very interesting. I mean, I know the topic as well with, agent versus principal, even though we've all talked about it a million times, sometimes it's still quite, people have questions, and there's all sorts of things that keep on popping up again, no matter how long you've been in the business.
Yeah, and there's practical issues as well. So it's all well and good trying to do exactly what you're meant to do, but sometimes it's just going to be practical issues where you just can't get something sorted with a supplier, in which case I'm not going to stand on the hill and say you can't do it. But what I'll say is, well, as long as you know what you should be doing, let's try and manage our way practically, but keep as close as we can. So there's a bit of daylight that we can clearly say we're principal, we're agent, et cetera, et cetera, et cetera. Let's get a contract in place, those kind of things. So, I quite often have debates about it and people don't always agree with me, but all I can say is you've asked me, I've told you, and then it's about trying to manage our way through it as practically as possible while running a business. So yeah, I'm happy to set out the topics and just present them to you. And as I said, whether I do it in small groups, if there's people who want me to do webinars, I'll do it with a number of small groups once there's a need to do it, because the more people I speak to, the more I'll get better at the speaking and the topics, and the more people I'll be meeting, and that's what I'm aiming to do over the next 6 or 12 months.
Amazing. Thank you so much. Perfect.
Thank you.
Damian, thank you so much.
Thank you.
Really
Really
interesting. Thank you so much. Thank you.
So,
Thank you, Damian.
That was useful. Come back to me.
Thanks so much.
My email if needs be. And that's it. Thank you.